It's a new year, and with that comes new housing market prediction. Today, I'm sharing with you 7 predictions for 2025 when it comes to things like interest rate, home appreciation, and other relevant data that you'll want to know if you are planning to buy or sell in 2025. Without further ado, let's get into the forecast. Happy New Year, everyone. Thank you so much for being here. My name is Sarah Newman. I am the founder, CEO, and team leader of the Elevate team at eXp Realty here in the Charleston and Summerville, South Carolina area. Our team would love the opportunity to support you in your buying or selling needs. All the information you need to schedule your consultation is in the description and pinned in the comment. Thank you for an incredible 2024, and we're really looking forward to lots of growth and meeting many more of you who are out there watching this video in the months to come. Okay, let's get right into these predictions. Prediction number 1 is that housing bubble alarmists will be proven wrong. So you've probably seen videos on YouTube or sensationalist headlines in news media outlets talking about some big crash that's looming and all this fear mongering around the housing market and how there's been this bubble that's been created through COVID days that is just going to burst anytime. Well, sorry, but I am going to burst their bubble because there is really not data to support these claims. Yes, we will likely see continued price growth and higher than expected interest rates, which we're going to talk more about in just a minute, but that's all. There is no bubble in sight, at least not when we're talking about the national housing market. Perhaps there could be micro markets that have their own little bubble for various reasons, but in today's video, I'm really talking about national market and the state of real estate as a whole in the US. Okay, so why do I think that there is not going to be a bubble? First of all, we're at nearly an all-time low in mortgage delinquencies at less than 1% nationwide. In order for there to be a housing crisis like there was in 2008 and 9, you would expect to see mortgage delinquencies be higher. Second of all is that 40% of people own their house outright. That means they either paid cash for it or they have since paid off their mortgage. This is also at an all-time high. Now, of the 60% of people that do have a mortgage, over half of them have an interest rate below 4%, and about 75% of them have an interest rate below 5%. So the vast majority of people who do have mortgages have really great interest rates still, meaning that their payments are much more reasonable. And if they have a rate that low, that means that they purchased before the summer of 2022, which is when rates really started to spike. That means that they've had time to start building up equity, and in the vast majority of markets around the country, we've seen price appreciation in the last 2.5 years. Of course, some of these people have owned their homes for longer than 2.5 years. I'm just saying that that's the minimum if they got rates this low. That leads me into the next point, which is to say that household equity is sitting at an all-time high. As of October 2024, the average home equity in the United States is $315,000. That's specifically for people who have mortgages. For people that have cash, their average equity is $350,000. This is up 8% year over year, and like I said, is a record. So for people that do own their homes, if they were to hit some kind of financial trouble, a lot of people would be able to sell without being underwater and without much trouble. All of that explains why I do not think that there is a housing bubble. What about you? Leave your comment below and let me know if you agree with these points or if you have another reason that I didn't mention that you think shows that there is actually a housing bubble. I'd love to hear from you. The second 2025 prediction is that mortgage rates will remain elevated. Now, don't shoot the messenger. I know this is not the news that we are all looking for, but mortgage rates are expected to stay in the mid to high 6% most likely throughout the year of 2025. They may slowly decrease throughout the year to the lower 6s. Most likely, they're just going to fluctuate throughout the year. Now, on this graph, you can see that the predictions are pretty spread out. Now, looking at the lower end of these predictions, in order for this to happen, where mortgage rates would spend the year near 6%, that assumes easing inflation and softer job numbers. The bond market must be satisfied that the economy is cooling in order for rates to ease lower. These expectations have been common for 3 years now, so let's see if 2025 is finally the year that they come to fruition. On the high end of the predictions, you see some bearish takes that assume surprises with elevated inflation data or similar economic strength, which occasionally spikes interest rates higher. As evidenced by the Fed's December 2024 meeting, these spikes can happen quickly. If you remember back in December, the Fed actually lowered the federal funds rate by 25 basis points, and yet interest rates went up. So that's why I'm thinking there is likely going to be some fluctuations throughout the year. But one thing seems pretty certain, which is that seeing rates below 6% this year seems pretty uncertain at this point. Prediction number 3 is that home prices will grow by 2.6% on average nationally. Among 13 recent forecasts for home price appreciation in 2025, there was a wide range of predictions. On the low end, you have Moody Analytics at 0.3%, and on the high end, you have Goldman Sachs at 4.4%. The average is 2.6%, which is pretty normal. Normal years are between 2 and 3%. Now here in Charleston, I anticipate the appreciation this year to be higher than the national average of 2.6%. We still have a net gain in population and just a ton of overall growth in our greater Tri-County area. Now, just how much appreciation will of course depend on which micro market within Charleston that you're in. Some areas were up in double-digit appreciation in 2024 and likely will be again in 2025. Coming soon, I'll be doing a video that goes over all of the stats from 2024, specifically about our Charleston market. So if that's of interest to you, make sure that you are subscribed to the channel and that you've tapped the bell for notifications so that you can get notified when the video comes out. You can also subscribe to our free weekly newsletter all about Charleston, where I share a lot of this information as well. And I do link to my latest videos in that newsletter. So that's another way that you could get notified and stay in the loop about all things Charleston. So overall here, in our local area, I expect 2025 to be somewhat similar to 2024 as far as appreciation goes, perhaps with even a little bit more appreciation than what we saw in 2024. Prediction number 4 is that housing inventory will rise. Most analysts agree that housing inventory will continue to rise into 2025. Inventory simply means the amount of homes that are currently on the market at a given time. Housing Wire is projecting annual growth of 13%, followed by Bright MLS at 12.5% and Realtor.com at 11.7%. So while I do think inventory will slowly tick up in 2025, I still believe that the rate lock phenomenon will continue into 2025. I've talked about this on the channel before, but if you haven't heard of it, this rate lock phenomenon explains what I was talking about earlier, which is how the majority of people that have a mortgage have interest rates that are locked in quite low, way lower than what we're seeing today. So for them to move doesn't really make sense unless they absolutely have to. But for the people that just want to, maybe they're tired of where they live, or it would be nice to move, but there's not some bigger reason like a job relocation or something that you would really just have to literally physically move to a different area. We see a lot of these people just hanging out and deciding not to move because when they look at the numbers, it just doesn't make sense. If they want to move into a bigger house, let's say they had a kid and they need an extra bedroom, and they look at the interest rates and what that monthly payment would be on that move up house, it really just doesn't make sense because it's going to be so much dramatically higher than what they're paying today. Now, if they have a ton of appreciation, then they could potentially take that money and move it into the next house, in which case perhaps their monthly payment could be low enough to justify and be comfortable for them because they've put so much down. But for a lot of people, they're just waiting for rates to drop because they just don't want to pay such a higher amount monthly. And then same for people that want to downsize or retire. If they have a mortgage and they're looking at those interest rates, they're going to get a smaller house that's more expensive, and they could be paying even more than what they're currently paying on their home now, simply because the interest rate is so much higher. So this has created a gridlocked effect that I personally don't think is really going to ease up until we start to see rates around 6% or in the high 5s. Now, one thing that's interesting to just make note of here while we're talking about people who may be retiring is this demographic shift called the silver tsunami. If you haven't heard about this, this is a term that explains how the baby boomer generation is aging and increasing the number of older adults in society. According to AARP, 80% of people over 50 own a home. As these homeowners start to downsize and cash in on their equity or unfortunately pass away, that will inevitably quickly release more homes on the market. Now, of course, it's not really a tsunami because it's not like it's all happening within a few month time span. This is happening over the course of many, many years, but it's still a big demographic shift that has impact. One of which is a big transfer of wealth, which leads me into my next point. Prediction number 5 is that luxury sales will not be impacted by this higher interest rate market. The luxury sector and the broader sector are essentially two different worlds in real estate. Affordability challenges that dominate for the average person are far less relevant in the luxury sector. Cash transactions make up at least half of the sales in the luxury market. Looking to the future, millennials and Gen Xers stand to inherit a ton of assets in the coming years. It's predicted that over the next 10 years, that $31 trillion, okay, 31 trillion with the T, will be transferred by 1.2 million wealthy people. Really just take in that statistic for a moment here. It's going to be very interesting to see how that transfer of wealth impacts not just the real estate market, but the greater society. Prediction number 6 for 2025 is that new construction will continue to gain market share and that buyer incentives will continue. If you are a regular at this channel, you know that we talk a ton about new construction. It's one of our specialties here at the Elevate team, and new construction actually makes up about a third of all of the sales in the greater Charleston area, which is huge. So home builders, from what I can tell, are still continuing into this year to offer concessions. So it could be a certain amount towards your closing costs, or it could be a rate buy down to buy down your interest rate, and just generally have deeper pockets to really be able to compete and make it more enticing for you to buy a new home than a resale home. In 2025, 700,000 new homes are projected, which is a 12% increase over 2024. Looking ahead to 2028, there's a prediction that completions in new construction could top 2 million annually, meaning 2 million new homes coming to the market in 2028. So I do not think that this trend of new construction is going away. Builders are continuing to build and try to decrease this gap between supply and demand and this overall housing shortage that we've been experiencing for quite a few years now. Finally, rounding out the predictions here at number 7, we have the total number of home sales will increase this year, totaling on average about 4.47 million sales. The housing market closed 2024 with just about 4 million total sales nationwide, which was the slowest pace since the 2008 financial crisis. So while sales are projected to rise this year, it's still well below historical norm. For context, the past 2 decades have seen an average of 5.15 million homes per year, with a peak of 7 million in 2005. Among projections for next year, Realtor.com is the most conservative, forecasting 4.07 million home sales. Following closely are Fannie Mae at 4.176 million sales and Wells Fargo at 4.187 million sales. On the optimistic side, the National Association of Realtors is predicting 4.47 million sales annually, with Bright MLS and Zillow predicting 4.4 million and 4.3 million sales respectively. That wraps up our 2025 housing market forecast. I'd love to hear your comments below. Do you think these predictions are spot on? Do you think that anything is outright wrong? Do you have anything that I didn't mention that you would like to share in the comments? Please let us know. I read every single comment and reply to them, so just know that your comments are not going into the YouTube void. They are actually read and appreciated. If you found this video helpful, I would appreciate it if you take a moment to subscribe to the channel and turn on the notifications so that you can be the first one to know about all things Charleston and real estate. Once again, our team's information is in the description and pinned in the comments. We would absolutely love to serve your real estate goals in 2025 and beyond. Thank you for the opportunity, and thank you so much for being here. We appreciate you, and we will see you in the next video.